now with the house calls with myself, Ryan, with East Main Street Insurance, Chris Kamara with Kamara Insurance. You're not changed yet, right? You are still Kamara Insurance Agency?
Oh, we're Kamara Insurance Agency.
Okay.
Right.
All right. I still keep trying to take jabs at you to get some sort of leak. Man, what a week it's been. There's been a lot of turmoil. I think it's been a great icebreaker to say that I'm sad this week with, a lot of passing that we've had. Today with Hulk Hogan, yesterday with Ozzy Osbourne, day before that, something else. But
so you're not from Hawaii, but a major, well-loved Hawaii artist also passed away.
Okay.
So passed away yesterday as well. So it's been a pretty big deal.
Yeah, it's been just a crazy week. No, this has nothing to do with house insurance, but we're just trying to keep it light today, and we've been busy with the way the market's been. Consistently, people are getting non-renewals. There's been a great snafu with the Fair Plan, which I'm actually surprised that it hasn't been as broadcasted to other agents or other people have been talking about it. But yeah, it's a continual battle with them, and I'm referencing the non-renewals.
So let's segue into that. I mean, let's have a quick conversation about what you're seeing and what I know other agents are seeing. My agency is seeing it very much less than most, but we've been able to find resolution for it. So what are you seeing? What is the issue first? Let's address that.
Well, and I called them again today. So the issue was July renewals. Some were coming through, some were not. And, it's really hard to get some sort of service level standard out of Fair Plan. So calling them, asking for the renewal, them providing it very quickly, but sometimes they're dragging their feet. So I called them again today, and they had mentioned, basically just send a full list to the California Fair Plan underwriters, and they'll get that remedied for you. She did hint at August renewals as well, not being released. So that is on the docket again this month to make sure that I'm getting the renewals from Fair Plan and that they're going to be released in time for August. So that's been a fun task. I think the only saving grace is that they're allowing another 45-day grace period for payment. Yep. So, a lot of times I would just rewrite it depending on the insured's capability, if they're already paying in full or if the lender's paying for it. But I'll just write a new policy. I can get a new policy in 5 minutes compared to waiting for the Fair Plan to offer that. Insured wants to make the payment, wants to get it done. So, yeah, we'll just
you say 5 minutes, but that's a bit more friction for the client, right? Because they have to send you updated photos.
Right. Yeah. So normally if I'm having a conversation with them and telling them about what's happening, they can send me photos the same, the same day.
And they're already in the home. It's a renewal. So
yeah. And I just have them text it to me. It's not that big of a deal. Just text me the name, your name and the photos, and we'll get the application submitted off and sent away.
We've been very fortunate. We haven't had to do that at all. So we've had a handful that haven't gotten their renewals. Mm-hmm. We've reached out to the Fair Plan. The Fair Plan is, we've documented the, interaction, and they say, they've got a 45-day grace period. Within 2 days, the renewal miraculously gets sent, and we send it over to the client, and everything's good as gold. So,
right.
We've had a little bit of a different experience. I don't know if it's a systemic thing for many, many different agents, because I know in our network, you and I have talked to some people about it, and they've been affected. So I just don't know how widespread this is, right? It could just be a batch or two of July renewals.
I would say it's widespread. I know a few other agents outside of our network. One's a large AAA agent in like the Auburn area, and they have a multitude of them. She's in another agent group that is also dealing with it. One of them
systemic there. Okay.
Yeah, it's definitely large. So I it's kind of nice, I think, on your part that you haven't had that many. I mean,
just a little bit of luck. That's all.
I didn't notice it up until, well, I was gone that first week of July as well. Plus, it was 4th of July. So I actually had a few renewals. I think that I was granted that they did renew in the beginning, and now it's mid-July, and I think I'm having, well, it's now late July, but my mid-July ones were the ones I'm waiting on a few still as well. So yeah, no rhyme or reason. I'm appreciative of the grace period. You know, that's kind of the only saving grace out of it.
Sure, absolutely.
Mm-hmm. Last week you missed out. You definitely participated, which I appreciate.
I wasn't on there, but I did watch you. You guys did amazing. Deetra did great. I created a little clip for Deetra's contact information if anyone wanted to reach out to her.
Yep.
Kind of like the idea of having guests on our house calls so you get more perspectives of what's going on in the market. Maybe I'm so sorry. I was supposed to go find a general contractor, wasn't I, to talk on this?
And I talked to Deetra whenever we were speaking about, how great she did. And I was like, we should bring on a firefighter too, because we had touched base on them saving your home. If you don't have great housekeeping or makeup or there's things in your yard, and if they don't see it as a savable home, I guess, they have to act quick too. She was going to try and bring on a firefighter to speak onto that and give you the viewer some sort of, some more relevant topics on it. But I also wanted to maybe try and circle back real quick on, why bringing on another agent is great, and why we kind of established this too is, I can't get appointed with every agent under the sun or every
carrier. Yeah.
Chris, I know you can't either, but our agent network is here to help you, the consumer, on getting coverage placement, and we don't want you to be on Fair Plan just as much as you don't want to be on Fair Plan. So that's why we have our agent group, is so that way we can, unfortunately, shift your address around to the other agent and help get you with coverage. So be on the lookout. I think we're going to get some more agents here on board and introduce you to our network, so that way you can get it up to date, as much information as possible.
Completely agree with that.
Yep. What else? Oh, I guess Deetra did want to bring up a topic. Let me bring that up real quick too. And see what it was. We can spitball on that. Oh, what was her topic? I know I brought it up. Not RCV, but she wanted to talk about market value.
Okay. Totally different things. Completely different than RCV.
Yeah. Totally different from RCV, ACV. Market value is you're buying your home for $400,000 because you're getting a great deal. Or, maybe the price of it's down, but it's a 3,000 square foot home and we need to insure it for $800,000.
We need to insure it to value. The reconstruction cost, the value of, or the cost it would be to rebuild that home to 3,000 square feet at like quality, right?
Yep.
And then the biggest one, the easiest conversation I have in regards to market value is you're not just buying the home, you're buying the land that the home sits on. So if your home were completely burned down, you still have value in that land. And that,
it still beats real property, right?
Years.
Oh, I didn't hear you. What'd you say?
I've had that conversation with clients for years as to why are you insuring my home back when it was flipped, right? The home was worth less than what the sales price is.
Right.
And I said, well, we're insuring to value, not insuring to your loan amount or to what the value of your land is.
Mhm.
I think that kind of flipped the other way around now with where we're seeing values. Typically, the reconstruction cost is more than, well, starting to see that it's more than the sales price.
Right. Yeah, and that's, I mean, people that have, I guess, the scenario that I like to think about is, you know, beachfront property or something with a view. You know, there's your view is always going to be there. So replacing the home that's why I guess construction costs always change so much, and why you should check with a local broker, because the reconstruction costs could change variable on your location and where you're at.
Absolutely.
Yeah. Which I haven't felt. I mean, I'm at easily $400 a square foot in my area, and even surrounding, I think.
Yeah, I wouldn't doubt that at all. And then you
You're
see these fair plan quotes for $400 a square foot, and people are just completely floored as to what that premium is versus what they're seeing, or even looking at their current deck page and seeing how much lower they're getting coverage for it per square foot.
Yep.
Here's another one. You brought up beachfront property, but in Los Lagos, Eddie Murphy used to own a home there, 12,000 square foot mansion. He bought it, or he sold it in 2018 for 5.5 million.
Mm-hmm.
And then it sold earlier again this year for 3.5 million. The home didn't depreciate in 7 years, $2 million. It's just, what is the market value for that home versus the rebuild, right? So pretty easy tie-in with someone famous, something local, and market value versus actual rebuild value, rebuild cost.
And that's the education piece that I think a lot of people, whenever you call an agent and you're not able to get through, is a lot of people haven't shopped their insurance in 30 years, 40 years. So not only do you have to explain that, but you're tailoring this coverage, and you're, you know, making it so that way they're not overpaying for something, or they understand what the coverage level means.
Mm-hmm.
You know, it's easily a 30-minute, 45-minute conversation. I would say easily 30 minutes. I mean, no way around it. Whenever you're having to dive in, that's usually about how long it takes kind of to go over everything.
Sure.
Yeah. What else have you seen in your home insurance market down there?
So, you know, I read Ryan Lundquist stuff. I talk to a lot of realtors, a lot of loan officers. And
Yeah.
It's an interesting market we're in. The honest truth, though, we're getting calls nonstop. Like, I'm currently about 5 voicemails behind, and it's not just me. It's a lot of agents are still very, very busy.
Mm-hmm.
And it's just, there's a lot of shopping going around, not just for new purchase, but for people being non-renewed. You mentioned that earlier. People that are just looking at the renewal going, wow, this is a 70% increase. I'm going to go look around. And sometimes, you know, they really don't have a better option. It really is that 70% increase. What did we see from one of our carrier reps? I'm going to pull that up. Give me just 1 second. He just gave out the renewals for the approved DOI renewals for July or June. It was. Give me 1 second here. The DOI released. Let's see what this says here. The DOI released its approval for personal lines filings. This is for June approved rates. So I don't know who's writing it right now. I don't know if they're writing heavily, but Grange, which is not in a higher fire area, they had a large homeowners rate approval of 37.5%.
Yep.
Is Wawanesa a captive? I'm not familiar with that one.
Wawanesa is captive. Yeah.
Okay. So Wawanesa received a 35% increase in their homeowners program. So that's 2 different carriers, both admitted and both receiving over 35% increases. So they're still happening. The market is still finding I don't know, a balance, I guess, for what rates are and what costs are, right?
Yeah. Well, and so then there's two components, I guess, with the rate approval is when does it get implemented? So just because it closed in June, a lot of times it's several months, if not longer, before it's actually put into place. And when does your renewal come up?
So let's do that a real-time scenario then, because you got to educate me there. I don't know that time frame. So what is the average time between an approval, not a filing, because a filing could take up to 2 years to get even looked at. But what is the average time between an approval and that implementation happening? Is it instantaneous? Is it?
I would say it's usually 6 months. I mean, that's the thing. And because of filing can take so long, and like the FAIR Plan did, they kept pushing out their implementation date. So they can't forecast whenever it's going to get approved. So they go in with the filing, update their date. Like I said, the FAIR Plan took almost 2 years. So it's like they'll say, oh, well, we're going to release this on May 1st, or okay, we're going to release this December 1st. So I would say a lot of times a carrier is going to put towards the end of the year in their filing. So that way, whenever it does get approved during that year, that it's going to be implemented.
So let's run that through a scenario. So XYZ carrier has a 30% approval last month in June, and they're going to implement it in November.
December, yeah.
Yeah. So now I'm with XYZ carrier, and the rate isn't affecting me right now because I have my current policy. My renewal is in February. I won't see that increase until my renewal in February, regardless of when it gets implemented, right?
Correct.
But if my renewal was in October, then I have a whole year of missing that increase. So timing does matter for at least some people, right?
Well, I mean, it just gives you time if you're paying for it to maybe know about it, or maybe your agent released some information saying that this carrier took rate increase, or maybe you've heard about in the news. It also gives you time to maybe put more money into your escrow account to help do that. Or even you're going to be asking for a reanalysis of your escrow account. So that way your mortgage payment doesn't go up.
So I'm not an expert in escrow, but we definitely should touch on that a little bit because that confuses a lot of people. So let's segue, if you don't mind, on that one real quick.
Yeah. I mean, I'm not an expert either. I own a home, you own a home, but I was in banking for a little bit, so I know a little bit about what you should do or what you should talk about, but maybe getting a realtor on would be a good tool too.
Yeah, absolutely. I'm putting it on the list.
Okay.
So really quickly and very high level, again, with the disclosure that neither of us are experts, but I would say 90%, if not 95% of home buyers that I write all are saying, oh, it's part of my mortgage payment. And that statement is true, but it's also a little too simplistic. So you pay your mortgage and then you have something called an impound account, right?
Yep.
I wouldn't call it an escrow account because that's where the terminology gets confusing because it's been used interchangeably so much.
Yeah.
It's an impound account. That impound account is where if you have an impound account, where your property taxes and your insurance, your homeowner's insurance gets paid out of. And that's accounted for as an additional cost in your monthly mortgage payment. Mm-hmm. But it's together and separate at the same time. It's a separate account, but being administered by your mortgage company.
Right.
And then, so a lot of people, we'll take a simple admitted homeowner. They'll pay out of their escrow. Oh, see, I said it already. Impound account. And we as agents will bill that impound account. And then the mortgage company would then send payment. We're billing their impound account. The mortgage company sends payment.
Yep.
And then let's say the rates go up. You went from, I'm going to make numbers up, but you went from $1,000 a year premium to $2,000 a year premium.
Yep.
So your impound account now is not accruing enough money with your monthly payments to pay for that next disbursement of, instead of 1,000, it's paying 2,000. Am I
Right.
on the right track? Does that sound about right?
Yep.
So then you get, what is it called when
Shortfall.
you get a shortfall, but they tell you something. They do an impound analysis. You said it earlier, and I can't remember what it was.
The escrow analysis.
Escrow analysis.
Mm-hmm.
And then, so then you get notifications, the homeowner, hey, your rates went up or your taxes went up, whatever it is, and you're going to have to pay X dollars more per month to your mortgage payment. Does that sound about right?
That sounds fantastic. Yeah, I mean, it doesn't sound great, but yeah, that sounds right.
I mean, as far as the understanding of what's happening.
Yep.
And there's no
and normally in that statement too, they'll say you can either pay a check to us or we're going to change your monthly payment.
Oh, so wait, they can fund that without changing what their monthly mortgage payment is?
My mortgage company will. I don't know about yours, but that's what I got. They said you can pay us an extra $600 or whatever to because of your shortfall, or we can increase your mortgage payment.
Yeah, I don't have an impound account, so I didn't know that.
You're smart.
You know, sometimes not. But what you do is you take that money, and instead of it being in an impound account, you put it in a savings account, and and you pay it yourself one time a year. It still hurts, but at least you get control over that.
Yep.
Cool. So I've got that in our notes, and we'll have an expert come on and talk about that. Another great thing that this carrier rep sent, which he always sends.
Wait,
really, really good
hold
stuff.
on, real quick. I have a real world scenario.
Okay.
So you had your increase. You went out and found a different coverage somewhere cheaper.
Mm-hmm.
So now your impound account has accounted for you to pay the $5,000. You found one for $3,500.
Okay.
You now need to let them know that you have not taken the $5,000 policy and are going somewhere different. So that way, and a lot of carriers or a lot of lenders, they're not going to do their analysis every month. You know, they have a time schedule whenever they do them all. So you'll need to contact your carrier or your mortgage company and say, I need you to redo an analysis, because that could also shift your monthly payment.
So we get that. Forget the payment for a moment. We get that daily, where someone's loan gets sold, and the new lender, the new servicing company or lender, doesn't know that we've changed their insurance for them, and you get a nasty gram from your lender saying you don't have an insurance, we'll force place you.
Yeah.
Or, you know, there's many aspects to that. The key point that most people should take away, or everybody should take away for that, is anytime your loan gets sold, you gotta let your agent know. That's the biggest headache, and people freak out about that nasty gram about you don't have insurance, we're gonna force place, etc. That's because your loan got sold, and it's supposed to be a clean handoff, right? The selling mortgage company to the buying mortgage company or servicer should be transferring your insurance information, and we've seen that fall through the cracks more often than not.
Well, I even people selling their homes, you know, they think that their home insurance is going to stop, and then it doesn't. It keeps going. So
yeah. So changing back to subjects now, that carrier rep did a really good job. He always does a really good job of providing information. And the piece that was shocking to me was, and I'm going to read it. It's an article from Climate Wire, and it says the California Fair Plan now insures $650 billion worth of property, more than double the amount it insured in September of 2023.
Wow.
So,
I hadn't seen that. That's pretty crazy. Where
you hadn't?
Well, I got the email from Stillwater and got that information. Sorry to name names, but yeah, I didn't realize that it was a direct link to the email.
The article, yeah.
Yeah. And where is that data from?
I'm pulling it now. So it says
key statistics.
Towards the middle, it says the number of policies. Well, here, let me share the screen.
No, let me share the screen.
Oh, okay, cool.
What screen are you sharing?
The article.
Oh, I'm sharing an even better screen.
Okay, good.
Okay. So this is where the actual data is from. California Fair Plan.
Okay.
Key statistics. So real quickly, Fair Plan has not been this transparent since 2018.
Yeah, it's good to have data. Absolutely.
Yeah, good to have data. So, but this is where, yeah, it shows it's crazy. Let me get rid of the comments too. Hold on.
Yeah, hide the chat overlay.
Escape. Where are you going? Chat. Don't want to overlay. Nope, don't overlay. You got it moved. Okay. So these are just, yeah, the key statistics and data for the Fair Plan and increase.
This is coming directly from the California Fair Plan's website.
Yeah.
Cool.
This part here, I mean, definitely you can see how much it's grown.
Mm-hmm.
Can you see my mouse?
No.
Okay. So, yeah, I was looking at, it looks like it was each year in September. Now, in June, 604 billion in commercial, or I'm sorry, in residential, and only 45 billion in commercial. Here's the scary part, that we know is starting next month, Fair Plan will allow $100 million per parcel.
Commercial. Yep. Which
this number for commercial is definitely going to grow after that.
Mm-hmm.
So now the exposure is just even larger. It's scary.
Yeah, absolutely. And do you have handy the concentration map? I know we had that a little while ago.
I don't. If you want to try and grab it.
Yeah.
Well, these have the hyperlinks for the business by county and zip code. Here's county. Let's do this. I'm Nevada County, so I'm just going to pull that up. Nevada County year-over-year growth. Policies each year. So in 2020, we had 9,500. In 2024, we have almost 20,000. I would assume now that it's over that, well over that, since we're in 2025.
Mm-hmm.
What county would you like to just quickly hover over?
Let me share this screen.
Yeah. Sorry, let me approve your screen share.
I'm pretty sure it'll be similar, but give me 1 second here. This is again from the California Department of Insurance.
Okay.
And this is their sustainable insurance strategy, insurance commitments for wildfire distressed areas, June of last year. So it's a year old, right? But we'll run through this real quick. Oops, too big. So I'm just going to roll down here. I want to show you the map. It's a great slide deck. I didn't realize it was available, but so this is going to show Fair Plan concentration rate of 15% or higher. Okay. If 20% or more of wildfire properties in a county are in a high risk area, so it's going to show that. These are Fair Plan policies facing wildfire risk. So this is higher concentration is this light blue. And then lower concentration is here. So you're in Nevada County. I'm going to blow this up just to that specific area. But
we can get all of us. You're in there too.
Nevada County, Placer County, so half, right?
Yeah.
What is the other one? Oh my gosh. What is this county right here?
El Dorado.
Colorado. Sorry. But you can see that they're all in the higher concentration, right?
Oh yeah.
And then let me back out and go to the next one. So this is where they're saying the companies will be driven, right? So what their intent, the California Department of Insurance, is to take it and have companies right in this, I don't know what you want to call it, green, lighter blue area.
Yep.
And then
Oh
this
my
is the
gosh.
growth of, they're saying fair plan residential policies represent single digit growth compared to traditional insurance. We know that's not true though. Why am I misreading this? Over the past 5 years, fair plan residential policies represent single digit growth compared to traditional insurance. More fair plan policies are being, okay, so this is the overall, so that's not a very good comparison.
Right.
Because then you're taking cities and stuff into account. Let's see what this brings. Nope, that was the end of that. That wasn't the deck I was expecting, but this just shows you there's so much more of the higher concentration of fair plan policies and wildfire risk.
Wow.
I'd expect LA to have more blue, but it doesn't. And then let me flip over to this one. Oh, it won't let me flip over.
Yeah, I'm looking at a super scary screen.
Let me share this screen, and then we'll go to yours. Hold on. So this is that article.
Okay.
And I wasn't speaking to the Florida piece, but it does. The article itself is California leapfrogs Florida in U.S. insurance risk. And the part that I'm looking at here, this article is from July 18th, this month, this year. And it says, in California, the state chartered insurer is undergoing unprecedented growth. The number of policies in California Fair Plan nearly doubled between September 2023 and June of this year, 2025. Well, let me click this link here. That's exactly where you were, just there. And this is, the data is great, but the wording, some of it's a lot better. California Fair Plan now insures a majority of households in 4 heavily forested Northern California counties. So we already know the counties. It's all around us in the greater Sacramento area. All right, go for your sharing. What did you find?
Oh, it's I mean it's just basically another exposure that I was looking at. It's still that key statistics and data on the Fair Plan, but I actually have it broken down per zip code, how much exposure that they have in the area. I did go to Nevada County just because
So let's take a zip code that's like in between me and you, like Newcastle. Let me find a Newcastle zip code.
Well, we can do 95602. That's or 603.
That's Auburn.
That's Auburn.
Yeah, that's not a good example.
Okay.
All of that's high fire.
Well, it's only 688 million. It's not that bad.
How about Newcastle, 95658, a little bit further down the hill?
95658. 1 million. Can I make this bigger? Yes.
Yeah, I can't see what you're showing.
So 95658. 1 billion.
1 billion. Yeah, a million didn't sound right.
That's just in the medium. The high, 590 million.
So it went from, wait, I'm misunderstanding. The exposure for that zip code is $2.1 billion.
Correct.
So you're showing the different levels, but the total, am I reading that right? The other? Why is it?
So the last column is 2 billion, 2 billion.
Mm-hmm.
But this first column is medium risk area,
Uh-huh.
and then higher risk area.
Got it.
598 million in high risk for single owner occupied homes. 30 million for tenant occupied homes.
In high fire areas in that zip code, right?
Yes.
So you're talking there's more fair plans in the medium areas than the high areas for that zip code?
No. There's just there's only $1 million of premium.
Oh. That doesn't look like $1 million. Oh, there we go. Okay, I got it.
So in low, there's nothing. In medium, there's $1 million. And in high, there's 2 billion. Which most everything's high.
Yeah. So let's go a little bit further down the hill. So let me see. I want to make an example of how it's appeared that high fire areas are no longer just Grass Valley, Auburn, etc. It's working its way down to Sacramento. So
Okay, I see what you're saying. Yeah. So
let's take Loomis. So let me find a Loomis zip code.
I don't know. Loomis is Foothill, but it's rural. That's the part with it.
So 95650. Can you find that?
So that was just straight up above it. There's in low, there's 674,000 and
61 million.
61 million in medium, 742 million
in high.
And so they only have 100 million more than what Newcastle was.
Right. And then Rockland.
No renters. There's no renters.
I can see that.
That almost makes me want to market renters insurance with my e-premium to just all of these people, knowing that there's at least that amount of volume there.
Okay, so now try 95677 Rockland. So now we're talking about really the suburbs.
95677.
Which most people would not consider high fire at all.
And where is this again?
Rockland.
So
right off the 80,
low,
Rockland, etc. Yeah.
Low, there's 23 million. Sorry.
23 million in low.
That's insane. That means that I can guarantee you those are State Farm clients. I can guarantee you.
Okay, so let's take a simple math. So give me 1 second.
There's no high. They have no high there.
But they're written with the fair plan, right?
They're written with fair plan in low and medium.
Okay, so the median home price in Rockland is 700,000. Okay. So let's take 23,913,613. Is that the right number?
For low?
Yeah.
23,913,613.
Divide that by 700,000.
Am I doing this math or are you?
I'm doing it. That's saying there are 34 homes on average. We're just spitballing averages here that are with the California Fair Plan in Rockland 95677. And then how many in, and then double that because the medium. So medium is pretty close. So there's, 80 homes in Rockland that are written with the California Fair Plan.
Wow.
In low and medium considered fire areas.
That's crazy.
So to hammer down my point, that's not considered high fire areas, and they're still being written at the California Fair Plan.
Yep. I would say anything that's in low and still with the fair plan, those people need to be shopping out with an independent agent. Because a lot of times those are captive. They're with like a USAA or a Wawanisa.
Hold on 1 second. Go down to the 93 million that's like right below. So you're at the 23 million. Yeah. What is that? What zip code is that?
95746.
That's Granite Bay. So Granite Bay median prices are definitely
$1 million.
median home values.
I would say $1 million.
1.14. So let me take that number now. I got
It's about
real
85.
small. 93,854,205 divided by 1,140,854. Yeah, there's about 82, 83 on median homes
Wow.
that are considered low fire, yet
Yeah.
still being written with the California Fair Plan.
Wow.
I think I'm saying that right.
Yeah.
And I can tell you right now, in Granite Bay, I have struggled to find anyone to write any reasonable premium.
Look at their high. Their high is 657 million.
Yep. $6 by $7 million.
Who's this one? Here's $1 billion.
That's almost 600 homes that are written.
What's
in high fire.
95713?
Say that again.
95713.
713. Colfax.
Oh wow. They have a 1.5 billion
In high. Colfax is higher up the hill though, right? It's further up.
Yeah, it is. So, but yeah, I mean, this data is it's just insane. And they've never been this transparent. I'm sure I could have found this in SURF. It wouldn't have been this detailed.
Mm-hmm.
SURF is the filing that the carriers have to use to show data for their rate increases. But I feel like this is helping to paint the picture because they are giving this data to all of the admitted carriers and saying, here's where you need to focus.
Yeah. Here's a bunch of low risk areas.
And you have because they have to write 85% of their business there, they're going to be hitting these larger zip codes.
Mm-hmm.
I feel like quicker. Like they're not going to go out to the Rocklands and the Loomises and say, "Hey, we've got a product for you. Come right with us." You know, They're going to go to where all the money's at, which is the larger exposed area.
So when you say with the quickness, let's quantify that. Quickness in months, in days, in quarters, in years. What is your guess? And I know you don't have a crystal ball, but
late 26, early 27.
Okay. So that article we got, or that email we got from the Fair Plan earlier today or yesterday, was it today? Pretty sure it was today. That's saying, and now we're spitballing a little bit more, but where did it go?
I'm going to bring up this sheet again. I'm going to share my screen again with the exposure, or I'm sorry, with the comparison chart. Because I just feel like on a daily basis, the people that I'm talking to don't understand that Fair Plan covers wind. They don't understand that Fair Plan covers the vandalism, you know, or vehicles. Someone's like, "Oh, what happens if a vehicle runs into my building? Am I covered?" And I'm like, "Yeah, Fair Plan covers that." What? No. Yes, it does. As long as you do not own that vehicle and it runs into your house, you know, your friend comes over and they hit your house with their car, the Fair Plan's covering that.
Under where? Point that out.
Right here under extended coverages.
So extended coverage is great. So let's drill into that a little bit. That is an optional coverage.
Yes.
I write every single policy with extended coverage and VMM.
Yep.
Not everybody does. So it's important to look at it. And I'll tell you that extended coverage in VMM or vandalism or malicious mischief, VMM, the cost associated with those two coverages is nothing compared to what the premium is in general for the California Fair Plan.
Yeah, maybe $100 a year.
Maybe. I don't even think it's that much. So it's just, did your agent check those boxes, right?
Yeah. Yeah. If they're not checking those boxes, obviously that's what you need to bring up to them.
And you can see it on your deck page, whether or not that coverage is there. It's on the right-hand side.
Yep. Geez, what else? We only got like 13 minutes left. I haven't seen any questions.
We were rambling quite a bit, which is great.
Yeah. No questions.
We even have viewers today. It's okay if we don't, but
do I have what?
Do we have any viewers today? It's,
I had a few viewers. I had a viewer on my YouTube and my Facebook.
Stellar.
Yeah, we didn't post out to anywhere, which I should have done. I know last time that you posted out about you doing the house calls, you had some great viewers come up on board. Nothing else yet.
No worries.
Okay, you're live. We're live. We're all live. Anybody from the chat? Did anybody in the chat say they want to join? No.
I'm going to go take a look right now. So I got nothing on YouTube. I'm going to go check Facebook real quick. Nope.
No? Okay.
No chats. So pretty good. Do you want to go over that email we got?
Yeah.
From DOI?
Let me pull it up.
And just give people some exposure as to what we're seeing.
Do you want to pull it up? Because I
got to go find it. Hold on.
Okay. I'm trying to think of where it's at. I put it in my DOI. I have a DOI folder.
Yeah.
DOI, Department of Insurance, just for the lyric.
Okay, I got it now. You just gotta.
I like it. You can share now. Before you used to ask for permission, and now you're on it.
It's amazing. So how do we turn your share off? Because I see, oh, it's over to the side. I like that. All right, so this came out today. I haven't read it in depth yet, but it says reform made real. The Department of Insurance is expanding coverage where Californians need it most. So the piece I was looking at is this right here. It says, for the first time in California history, insurance companies will be required to write more policies in wildfire distressed areas.
Yeah, forward-looking model.
Yeah, where did you see that in here? That's this one here, right there. Today, the department completed its review of the first forward-looking wildfire catastrophe model. And other states have had catastrophe models. California is working on the first ever forward-looking. So everything before was based on backwards-looking models, right?
Mm-hmm. So, yeah, traditional historical is based on how many fires occurred in the past X amount of years and how much damage that they caused. Doesn't account for climate change, home hardening, or updated prevention practices. So with forward-looking modeling, you can use current data, vegetation, wind patterns, climate trends, and then you can also incorporate all of the mitigation efforts. And I think that's part of the sustainable,
Yep.
What's it called? The sustainable energy.
Sustainable insurance strategy.
Yep. So like defensible space, fire-resistant roofs, and then also lets you run simulations to estimate how likely a wildfire is going to occur, kind of like the IBHS stuff that we went over in several other restreams or office hours. So I think that's huge. I mean, that's where the insurance companies can better assess risk, because they already have been using forward-looking modeling in a lot of other states, where for California they had to go backwards. And the other bad part about looking backwards is that I've seen with the FAIR Plan modeling is that they weren't putting out data. Like, there was a 2-year gap of data. So
yeah, every 2 years. That's right.
They weren't providing all the information. So it's like, how am I supposed to use information whenever I can't even see the past 2 years of what's actually happened? So This is going to be huge. I think this is going to help not only for forward-looking, but for carriers' rate approvals and filings, because of the whole speed process that the DOI now allows. So that's why I feel like the traction is going to maybe move a little faster than we've wanted, or not wanted, but faster than it has been.
Than we've seen historically. Yeah, I agree. We wanted to move fast. Absolutely do. This is it's not at this pace of where we're going. It's not. I like to tell people it's not sustainable. I mean, you look at some of these rates; they've gone up. From 1,500 to 3,000 to 6,000 to 12,000, and those are real numbers. I've seen that happen in 4 years.
Yep.
Cool. I'm gonna close this and stop sharing that window. Anything else you got in your mind? Any new carriers you can think of that are coming out?
I keep hearing about Kin Insurance. They're also a non-admitted company. I'm waiting for an admitted, and I think you might have a better pulse on an admitted company that's trying to come back.
I actually got a call from a person this week, and Kin is non-renewing them in El Dorado Hills because, and I think any carrier is going to non-renew it, but they're all looking, right? So after the inspection, they saw that there was a wisteria and an oak that were hanging over the balcony, and the client would have to pay like $10,000 to get the trees trimmed back. And I didn't end up helping that client. I was unable to help him in the time he wanted, but it is interesting. Kin is out in the market, and they are writing, and it looks to be writing competitively. But I don't exactly understand their appetite or how they're determining what they want to write.
Whenever I got a quote with Kin, and I'm in Alta Sierra, they had to take it to this upper level echelon management to review everything, and then they finally did. But I never went with them. I just wanted to see, one, who they were writing with, what the carrier was, what the price was.
What was that price? Was it competitive to what you're currently paying?
It was not competitive. It was about, I want to say $600 more. But I'm also with an admitted carrier, so I can't complain.
Yeah, got it. I don't think I've got anything else on the top of my head. Do you?
I don't. This has been a really great show. Didn't really get any participation, but traction is happening. It's coming. We're gonna keep bringing you material as much as we can each week.
And we're committed to these office hours for when people actually do start finding us. We'll be here to answer any questions. I'm here next week, and then the week after we'll be having this podcast, and I will be on something by the beach back home in Hawaii. So I am taking my computer, and yes, I am doing the podcast.
Nice.
And it won't be an issue like last Thursday was.
Well, the other benefit with that too is you don't have to worry about your background, because it's just going to be natural.
Absolutely. Cool, man. Well, we can end it now, and we'll be back next week.
Okay.